What do you mean, Bondi?
We're on, and we're live. And good afternoon, find some coffee, and welcome to the this edition of a Royal Commission Q&A. And with me today, I've got a few special guests. I've got Peter White from the FBAA. I've got Brett Mansfield from Buyer's Choice, and I've got Scott Beattie, who is a resident dad from Queensland. So thank you, Scott, to fly all the way down here. Hopefully, it wasn't too cold.
No. Once my body went numb, I barely even noticed it.
Now, jokes aside, I guess I'll probably start off a little bit in the sense where you were the resident funny guy, and this week with what's happened, obviously, you've become less funny. Obviously that's why I thought it would be a good idea if we got you down here to say it with your feelings and thoughts from a broker's perspective, because this week has been monumental, unprecedented, and pretty rough. So, Scott, would you have a go to say?
Look, I think as a broker, I've been around for myself since 2005, so I think as a broker we're all feeling it, and all feeling the more emotion of feeling like we've been screwed over or made as a scapegoat. I think there's a positive and negative, and I said this during the week. The absolute positive obviously was Monday night I got home after the announcement, my wife came up and hugged me I didn't bring flowers or anything, she just did that voluntarily, and that was excellent. But on the downside, so I've put that in as crossed off a bucket list item there. But on the negative side, I guess we've got a raw emotion to deal with, and what does the future hold? And I think that's probably for me as a small business owner, as an employer, as a consumer advocate, not a self-appointed one like choice. I'm in a position where I just don't know what the future holds, and that's probably, I think, where the emotion is. Jo is my moderator very much so, and she always comes out with pearls of wisdom. And probably the best thing she said to me was, "Don't forget your customers who are your advocates, as opposed to the people who are fighting against you, who were never going to deal with you anyway." And that really hit home to me when she said that, because I was spending a lot of time trying to justify things to left, right and centre, but I didn't want to, like you said, don't forget about the people who are your advocates.
Yeah. Now, Brett, you're a navigator, so obviously you've got brokers looking to you for a bit of guidance.
Yes.
Yeah, so...
so it's been an interesting week, and I do feel different now than I did Monday afternoon when the report was released, and certainly we've had a lot of phone conversations. There's a lot of concern, there's no doubt. And as you said, Scott, I think a lot of the concern is just driven by doubt. We just don't know. One thing that hasn't changed from Monday last week to now is the recommendations. They're still there. But I think what has changed is we've had time to get over that initial shock and start to think about what it means. We've had time to have a lot of conversations.
There's a lot because
Yeah.
just to let you guys know, the interactions actually hit 65,800 in the last 28 days.
Which is massive.
What's a normal month?
A normal month's around about 36,000. Yeah, so it spiked massively, which is why one of the reasons I did try to put Royal Commission threads in one thread every day, so that it doesn't explode and we can easily find it. But what I found was, like you said, people needed a place to go and
Just
get information.
Have a conversation.
Yeah.
Yeah, talk it through, and through those conversations, that's when clarity starts to arrive. So I'm at the stage now in my thinking where I'm now at the point of going, okay, so what does the future look like? We've got between now and potentially June, once the election's held, we know how our government is, that we can start as an industry to pull together and go, okay, what do we need this to look like? How can we influence it? Who do we need to influence? Who's going to support us? Who is going to be the body that represents us? What can a broker do at the grassroots to influence the outcome? And there's been some marvellous outcomes already with the way the industry pulled together. Fantastic. So I think my thinking is moving that way at the moment. I certainly have seen though, we work very strongly in the new entrant space. I've had 3 that were looking to come into the industry now. They'll look, maybe not at the moment.
seeing some people basically make decisions to
exit.
yeah,
Yeah.
or in a case of Sharon Palmer, let go, which is unfortunate. So.
I was going to retire next year. I think I might bring that forward.
You're too young to retire.
No. But that's a thought, but I've also seen on the other hand, others go, well, we just need to really get on with business. We've got customers that we need to look after. We've got to just stick to our plan because nothing's changed there. People still need money. We still need advice. So none of that's changed.
Yeah.
So stick to the plan and keep building your business. And we'll see where it ends up. There's just too many variables that we can say.
So, Pete, my phone has gone nuts. My messages have gone nuts. My email has gone nuts. I could only imagine, the amount of messages you've been getting.
It hit way past 500 in less than 36 hours between emails and messages and phone calls. It was rather significant. Can I just reflect on your comments here? I mean, the most important thing at the moment is understand these are recommendations, these are not done deals, regardless of what the political statements are that are being made. And simply the most important thing is to keep running business right here and now. And we talk about what can brokers do, and I've been saying this the last 12 months since the Royal Commission started. Make sure you get customer testimonies done and put them up on social media. The power of that public's voice as such is one of the incredibly powerful things. And so the petitions that are happening at the moment, and there's the change.org one, which was the first in the market. It's just under 70,000 signed, including borrowers. Once these petitions reach a certain size, they can then be put before Parliament.
What is the exact size?
Minimum is 100,000.
Okay.
Best is 500,000.
Yep.
It's almost like a done deal once you're at 500, but 100,000 gets the voice at the table. But these are things that politicians will look at, because at the end of the day, there's a politician that's going to make a decision on this. Doesn't matter which way you cut it. And from day one, and I did a video Monday night, I was fairly ticked off, to say the least, because all the political experts, all the legal experts, even the politicians were saying, not going to have prescriptive measures from the Royal Commission. So this was something that came out of left field. But at the end of the day, that conversation between then and now has changed a lot. And that's by way of, I guess, clarity from where the Liberal Party sits in regards to their stance. And they made that fairly clear in their response paper that was out on Monday week. And although Labor made the comments they made, that conversation's changed. I tell you now that although I met with Chris Bone before Christmas in December, his office reached out to me yesterday and said we need to talk further. And part of the reason why I'm in Canberra all day tomorrow before I wind up elsewhere.
Peter, can I please clarify something you said there as a broker?
Yep.
You said nothing's set in concrete. Both parties have said trails go on from July 1 next year. Are you suggesting that's not in concrete?
I didn't say set in concrete, but the decision is yet to be defined. Yes, the Liberal Party said the trail will be banned, so that's why I say we do know what the Liberal Party stance is. You've got to remember the comments that Labor made was almost like a blanket statement without definition. That definition is yet to be had, and I am more than just a little curious to where things will be once I get past tomorrow afternoon. And we're not on a path to get definition. One of the things I'm really concerned about, and I was speaking with a major non-bank this morning, a whole group of their executives, was the mental health of our industry. This conversation started back at the back end of December of 2015 about asset or Kelly O'Brien actually was going to do a remuneration review. So we started that back then, and we're still in that journey now. And in practice, the mental health of our industry is under a lot of stress.
It's been tiring.
Yeah, and you tell me about it. But we need clear definition, right? And this is the things we're saying. Liberal Party put a peg in the ground. Now remember, they're saying trails banned from 1 July 2020, and in 3 years' time, it's not banning up fronts. It's a review of what's happened in the preceding 3 years to have a look at what the implications, impacts would be if a consideration to a fee-for-service model was considered. It's a kick-out. right? I'm very close to the Liberal Party and have been for a long time, even going back before they were in shadow. I think they were wedged into a corner with this, so they had to make a statement. Now, if trail changes, it is not the end of the world in as far as something like this is the example, and I'll explain why I say this is the example I use on media, and it's resonated really, really strong. Basically, brokers are paid on lay-by by lenders. They lay-by your services, and they say, right, well, I owe you $5 grand, just pick a number, I'm going to pay you $2.5 grand now, and over a period of time, I'm going to pay the other $2.5 grand. But I owe you $5 grand. Now, if you get rid of trail, right, the lay-by is, well, in that case, I'm still owed $5 grand. So you're going to have to pay it to me now, up front. And then what does that look like? And there are conversations happening today as to what that would look like.
So you believe upfront commissions will increase?
It would have to. Yeah, I do believe. If that was to happen. Right? Remember, everything's a big if, and it's a problematic thing because it's going to be a matter of who's in government and what decisions they make. Right? There's very little that will happen between now and the election to actually formalise anything into policy. And we've got to remember, this is federal election time. This is all about what statements I can make to get people to vote for me either to stay in government or to get in government. And how many times have we heard politicians on the rah-rah in a federal election and after the election go, shit, what happened to that? Nothing.
Has that happened?
Oh, why do you say that? But you know, these are the challenges, but yeah, I do believe upfront would increase and have to compensate. Then the question says, what happens with clawback? Right? These are the discussions that need to frame out.
And is it, if it's not trail, is it a model like the Bendigo and Adelaide model of revenue sharing that they have with their franchisees?
All these things to be considered. Yeah. But you know what the bigger issue is that even with my conversation with ASIC here this morning, even the regulator says, well, we found there was no systemic issues with brokers being paid commission and getting trail. So you then turn around and say, where did this conversation actually come from? And it's a real annoyance because it comes from, and if you ask the journalists, most of them can't answer it, but this all comes back to ASIC's remuneration paper. And all of a sudden, the discussion turned from that paper to saying, well, brokers are evil because they get paid commission, and commissions are bad because it means they write higher loan sizes than proprietary channels through the bank. And ASIC's data did show that. Higher loan sizes through broker channels, through the bank channels. But do you know how much it was?
30,000?
31,250, I think it was. And they also said, though, that brokers generally have lower property values on the loans that they write with higher LVRs. And when you run the maths on that, it's $21,000. We're talking, when we talk about trail being evil, a cup of coffee a month. I mean, how stupid a conversation is that we're having to be in this position today over what is a cup of coffee a month in trail?
And that's without putting context around the broker perhaps having a better understanding of the taxation system we work within and for the client's best interest to have that interest-only loan or to borrow that bit extra to do that extra work now rather than come back and do another application.
One to stop you guys, I think we might have a bit of technical issues again. How are you feeling? Are we good? It's just swapping between that and the other. Oh, okay. Sorry guys, another technical issue here. You know what about if I just bring the machine now to hit to me? Would it work? No? It's still live, yes? Yeah, just use it. Sorry.
So, no, it's fine.
One of the great things about going live is if it can happen, it does happen.
So there is a huge amount of conversations that happen around this whole conversation. And one is the stupidity of the conversation in the first place. And then there's a whole host of other considerations that then impacts into what happens if you do pay an upfront, right? So the upfront increases. How's that equated by the banks? I know what the bank's going to do. They've actually got, in principle, confirmation already. Interest rates will go up because they no longer have the lay-by to be able to push it into a cash flow model as such over a period of time. They've got to work it out here. So you've got an unintended consequence of risk of interest rates going up.
Can I just also interject there? As a mortgage broker, I spend way too much time on social media, but as a broker, I've been spending a lot of time responding to people and looking at people's comments. So a lot of people are saying, I get paid trail to service my clients. I think as an industry, we need to have a consistent response to this question, because it's what people say, oh, you get money for nothing. Yes, we service our clients. As a business owner, that makes sense. If I go to get my car serviced, they offer a free coffee. That's customer service. So it's built in, and it's part of why I may choose that provider. But the trail, like Peter said, it's a deferred payment. We'll give you X now and the rest later. I believe when you're trying to defend what you do with your pay, you're already on the back foot.
Yeah, you're right, but you also got to remember a lot of this stems from the Productivity Commissioner, who basically, through their conversations and so on, is that it's not written into any agreement that you get paid trail to do anything. It is the deferred payment. But there has always been a principle that this structure, when it came out, that there was an expectation that the broker would be doing things.
So
it wasn't a...
How does the best interest duty then flow into that? Because that then becomes potentially that obligation.
Well, the obligation of best interest, if, let's say, trail's gone and it's all in up front, the best interest obligation stops at the day of settlement. Bottom line. Because you're not... Well, that's another discussion that will have to be debated and sorted out, because, again, I had this conversation twice this morning. I'm probably singly the loudest voice and advocate against clawbacks. You do your job, the loan settles, why the hell do you lose your pay? I understand if you breach agreements. If you commit fraud, you deserve a bill across the back of the head. We're all in that box. Right? But if you've done your job and life happens versus a breach, then you did your job.
And look, in some of the lender's defence, and in my years I have written the odd loan, when I've had a clawback, and I do believe it's unjust, I've approached the lender in not all cases, but in cases like the BDM has said, yes, we'll support you in this. Not always, but you've got to plead your case.
Exactly, and I've had aggregators come to me and say, well, Pete, if there is an issue, we fight the battle, and we don't fight the battle unless we believe there's just cause, and we generally win. So my response to that is, why should you have the battle in the first place? Isn't it the amount of administrative cost that is wasted in both the aggregator and the lender and the broker side? Yes, they go, so where's the cost-benefit analysis on this? Because I can tell you now, it just shouldn't be there in the first place. There's so much administration cost and time has been eaten up.
I think a lot of brokers think that you can't file clawbacks, and they just don't bother, but you can.
Yeah, you can.
We've had plenty of success in getting them overturned, Scott, same as we talked about.
But
for the right reasons.
And if clawback's going to remain, do lenders have an obligation to say, hey, John Smith, your client with XYZ Bank has lodged a discharge request. I've asked BDMs this question, they've said we can't tell you for privacy. And I go, hang on a minute, every single month you tell me that client's balance. So where is the privacy?
that is a sticking point, isn't it? Because you're the broker who brought pretty much the kitchen sink to the lender about the client, but yet once it settles, you don't have access.
And the other thing, the Commissioner did mention 2 points. He said, why should the broker continue to be paid after the job is done? Yet on the other hand, he said, why shouldn't the broker be at risk of clawback for 2 years if they haven't done their job properly? Well, look, we either have done it or we haven't. There isn't two sides.
And these are the debates within the paper, because within that conversation in the final paper about clawbacks, it was prefaced at the beginning saying, but if commissions exist. So he's actually hedging his own bet, saying, yeah, we believe you go, but I'm going to make a provision if commissions continue on. So from a political discussion, it's certainly not 100% definitive. There's if you like, almost an out clause that sits in the back end of it as well.
It's a view.
Yeah.
The recommendations are a view.
And can I please clarify, again from a broker, personally I don't use a clawback quote, but they will also be outlawed.
They'll be outlawed. That's really where the Productivity Commissioner went, and what the RC is backing into, saying passing that back as a broker back to the customer.
So that's gone or suggested, or
these things are all just recommendations.
Yeah. So if you're doing it now, you can continue to do so.
Correct.
Yeah.
Yes, you can. That's the right thing to do, not something.
Yeah.
But yes, you can.
Well, it'd be worth looking at how to transition your model as a broker.
Yeah.
If that's part of your model, to changing that. Absolutely.
Yeah.
I guess as moderator and plus admin of this particular page as well, we get like I said, we had over 60,000 interactions. The theme I'm getting at the moment is that brokers just want to know what to do. Brokers, we've got 3. Hang on, and I think that sound's just gone. Okay. There's a big tip. Sorry about that. Okay. No? Thank you for your patience, guys. Thank you.
We don't know what to do to move forward. That's the problem.
I'll just take the other one. Let's go.
Yeah.
Yes, no?
Yeah, you might need to.
Okay. Just bear with us for 1 second, take a break, toilet break.
Still trying to need that microphone.
And we're back. Sorry, so if we can just talk a little bit louder, I do apologise because our microphone's a little bit shot. So really for us at the moment is what can a broker do? Basically, it just sounds like everyone wants to do something, but you know, even with the petitions, there's like 3. Right?
We've got to be really careful with petitions that we don't fragment the voice. And you know, we could have set up a new one as well, but I don't believe in that. We should be supporting, in my view, those that are out there, and the change.org was the first one out. It's just under, I think it's around 67,000 people have signed that petition, including borrowers, and we need to get those to the right levels. Then they can be a voice of the people in Parliament, and that becomes a very powerful thing. But in saying that, yeah, we've got to also then support what the aggregators are doing. A lot of them got hashtag themes that they're working on, and get behind those, because that creates a social media groundswell as well.
I think as an individual broker, I think there's a lot that can be done. If I can just maybe point to a couple of examples I've seen, one of our team, Edwina Dixon, who runs Pinpoint Finance, and find her on Facebook. She's done a magnificent video that she sent out to her client base. And it just really spells out, and it professionally prepared, fantastic effort, and it's just really worth looking at that. I think we underestimate our influence with our customers and with our referrers. We need to keep sending the message. I've noticed the media, the popular media, has really slowed down the last couple of days in their reporting around this issue. It's starting to die from that perspective. I think we have an obligation then, as the participants in the industry, to keep the conversation alive, and individual brokers can absolutely do that with their own client base.
With their client base. I mean, the media will always move on, because the subject of today is a Royal Commission to aged care. So our conversation has stopped from the media, but you're right, that interaction with your clients to stimulate conversation, whether it be sending out videos, letter writing to politicians. You know, they're all in federal election mode, so that always has an influence. It's a good thing. The only thing I'd say there, if you're having a conversation with a politician, make sure your facts are right. I'm hearing conversations where I'm going, yeah, that's not quite right.
And make sure it's about the customer outcome.
It is. It's not about commission.
It's not about remuneration, it's about the customer outcome.
That's right.
I actually met with Jim Chalmers last week. I was same seat, 24 hours behind you. He did say I supported pretty much what you said in that regard. So, and his concern seemed to be largely around whether we would choose a lender based on a commission, rather than what the best product or most appropriate product for the client was. And I think anyone who's in the industry, obviously, it's such a, yes, we want to get paid, we enjoy it. I have tried to buy goods and services just using my charm, but I do find they always insist on the money. And same with my customers. I'm happy to do whatever I can for them. I want to be paid, but providing I am getting a paid out from a lender, I'm happy to recommend from that panel of lenders.
And Scott, I was in a room with a group of brokers this morning, and no one could tell me who the highest commission rate on our panel was.
And especially at the moment where
it was irrelevant.
It's so policy. It's a policy-driven environment. And the problem when someone goes to a credit-scored lender and not realising they're not going to meet policy, it's just going to start rolling backwards from there. So that was one thing. On the other hand, Jim Chalmers is a Shadow Finance Minister. He was excellent. I've got to say I was very pleased post-meeting. However, the next morning, Andrew Leach, who's the Assistant Treasurer to Chris Bowen, I believe, he said we will absolutely be implementing all 76 recommendations. I've gone back to Jim with no response as of yet, but saying which is it? Is it you or him? Which is the correct one?
And any public statement has to also be supported by the party. So, like I said, tomorrow I'm meeting with Chris and with Claire for a much clearer conversation of that. And I think sometimes in political world, people get a bit outspoken where possibly they shouldn't. That is a long way from it. That conversation is a long way from over.
As a broker, do you believe that an industry association, be it MFAA, FBAA, would make, let's say the election was in May, which it is, would you say, hey, in our belief, if you're a mortgage broker, you should be voting XYZ party? Do you believe you'll make a statement like that?
That's a really tough call. It really is.
Well, I like to ask tough questions.
I came from a family as a kid where mum and dad just voted Liberal. It was just a done thing. If the Liberal position is worst case, it's probably not the worst case. Depending on what Labor does or doesn't say, it could put us in a better position. But it's not, when you vote, it's just not about our industry.
Agreed.
So you've got to look at policies on a broader scale. And that is a very tough one to answer.
Yeah,
and
I'm no Lee Sales, but
I'm so tempted to make a comment, but I'm not.
I'm going to take it as a comment.
So if we look at then, if all brokers around the country continue this groundswell of continuing the noise and continuing the conversations, then if we look at an industry, then how as an industry which is fragmented across 17,000 small businesses, across multiple aggregation groups and sub-aggregation groups, how do we find a voice? Is it, and Peter, I spoke to you earlier about this, is the CIF the vehicle for that, or what is the vehicle for us as an industry to have a voice at that table when the time comes?
Well, interestingly enough, there's just under 20,000 brokers, and we spent 10 months working with ASIC's Data, an independent research house, to get clarification to it. There's just under 20,000. And Deloitte's paper that we're a part of being commissioned last year, there's 27,100 full-time employees that we employ as an industry. So there's a big impact politically to damage, if you damage this industry sector. With the Combined Industry Forum, I'm not their spokesperson, but look, I know that from a Treasury perspective, it has a lot of relevance because it's probably the only collective voice as such that they've got to get at a table. It's not easy. You think of the 30-odd people that sit in the primary group between associations, lenders, aggregators, brokers, consumer advocates, rightly or wrongly, but who sit at that table. How often do you see a group like that? So it's a very valuable component to Treasury, but also supporting.
And if you sit in Treasury's seat, they'll be going, well, who do I talk to?
Yeah, exactly. So from a regulatory position, I believe that that is a great vehicle, and it's a finite vehicle. So it was built really to respond to ASIC's 516 report. There's an overlap piece there with the CEGET report as that interplays with all that. But once that's done, it may or may not have another step. It's an expensive thing to run, so you've got to make sure it contains that relevance. But for the moment, Treasury seat is an extremely important thing. From there with the spokesperson, there's all sorts of means of way, I guess, to lobby industry, to lobby politics. But the reality is that not everyone can get to that point. So I guess you've got to focus us in a bit. I do it as a specialty of mine as such. I'm a registered lobbyist in my own right as well. So we have, a specialist position, and we take a very strategic position with a whole lot of, with several powerful political power brokers that sit behind us as well. To make sure that we can take these messages in a focused manner into the politicians. And as I said, the conversations are changing dramatically, and Mike Felton's been doing a wonderful job with what he's doing. He and I cross paths all day in Parliament House in Canberra on Tuesday, crisscrossing between medias, and I think we wound up with about 78 media pieces after that day and the following morning, and I'm still radio again yesterday. So those conversations in Parliament have sort of come to its tail end. But these are the things that we need to influence the decisions of politicians, and we're all, I guess, in principle, coming at the same endpoint.
And I think it'd be very interesting when the time comes when we have that election. We know who the government is. They set an agenda of timeframes for the first steps, which is that, particularly around the REM, the trail piece. It'd be, interesting to see as the banks start to come forward with their proposals, what the breadth of those proposals are, what they look like. Wouldn't it be lovely if they all sort of land somewhere nice and tight around something that works for us all and we can continue our businesses?
I love that dream.
Yeah.
It would.
On that point in the CIF, I've got a question and a statement with a statement first. If Erin Turner got a glass of water for you and Mike, would you get her to taste it first just to make sure it wasn't poisoned?
I'd throw it.
So
I have no hesitation. I'm sorry,
yeah.
it is public knowledge. I'm not a fan.
I don't believe many people would be. But the real question I had on that is, a lot of the comments that I've seen on social media over the last week is, and even from politicians, you get paid a different commission from lender A to lender B. Would it not have been better to have suggested an MFAA or FBAA suggested commission model of, for example, 0.5, 0.15 to resolve this perceived conflict?
The problem you have is competition law. So unless every broker in this country united behind and gave us a blessing to negotiate what their commission should be,
but
it's a very difficult conversation because actually the ACCC's competition law actually prohibits a collective conversation like that. So we could.
Like a suggested.
No.
Is our suggested.
There are certain conversations that happen politically. I'm cautious not to preempt things and to suggest things that may not play out. But that sort of conversation, together with clearer understandings to mitigate product conflict, for example, these things do have a result, which is why I was called to meet with the Labor seniors tomorrow, because I do believe there is a resolve to this that plays out in ensuring that we maintain the industry that we've got as such, plays in favour of the consumer, plays from a political point of view, and mitigate some of the risks that could play out the back end.
Well, because obviously, as I say, anyone in the industry knows it's such a nominal choice of what your product is. It's a non-event, if that makes sense. But it's that perceived.
Because of how it can be structured.
Yeah.
Again, I don't want to go in the essence of it at the moment. Something I need to keep together a little bit. But at the same token, there was. I'm pretty sure AFG did a piece through the asset remuneration review where they actually analysed across the different commissions, and there was 2/5 of bugger all in.
Yeah.
I'm pretty sure that's been put to government.
There was a certain CEO who directly quoted in the Royal Commission, Matt C. I don't know what the C stands for, but he directly quoted that brokers were choosing a lender based on the commission size.
But he also directly quoted the brokers do nothing for their trail.
He was coached.
And threw his previous boss under the bus as well. I think we'll...
but I guess...
Great yourself.
But was that...
That will be done.
So was that statistic valid? I don't... For me, and the average... Most brokers I speak to, I'd be very surprised if it was. Obviously, the other one is, which I've seen re-quoted, is the brokers earning upwards of $1 million a year and more 1,000 odd brokers. Someone did do the maths for me and said, well, that means you'd have to write X amount of loans.
I think there's a fair reasonableness to say that there are some large broker businesses and some listed entities that would generate that revenue. But the individual broker, we know by the research our Deloitte paid, this was about $67,000 a year in gross, rough money. So it's not. I mean, these are throwaway lines that I would speculate to say are self-interest, more so than anything else.
Yeah, I was surprised that it wasn't investigated more by the Royal Commission before it was just put in there as fact.
We actually are petitioning politicians on the fact that the banks were consultant before the final report came out, and we as an industry were not. And given the extent and the gravity of things that have transpired, we should have been consulted, and we were not. We were
effectively held to trial without the opportunity to defend ourselves, and with no right of recourse. Now we're on the back pedal to try and defend, to get back to where we were.
Scott, can I just touch on something? One of the recommendations was around bringing the mortgage broking industry in line with financial planning industry, which would mean a change to educational requirements. And I think financial planning is now moving towards a degree-based. As a broker, your thoughts on our current education standards, and could, as an industry, we sustain an increase to that?
I guess you're going to get to a point where people are going to go, is it worth my while? And is that standard the same to be a broker as it is to be if I went to ANZ as a mobile lender, it doesn't matter, whoever, is it the same standard across the board? Because otherwise it's defeating the purpose. Because if the purpose is that people providing financial advice for a home loan, regardless of whether they've got one or multiple lenders, is that they need an educational standard, well, then it should be applicable in-house as well, in my opinion, if it was to be the case. Personally, as someone who's been in the industry for 29 years this year, I don't see that as a value add. I can see that people feel potentially more comfort with a degree-based background, but I think the only way to do it is to get your hands dirty. I represented Australia in triathlon. I didn't do that by studying it. I did it by training and getting my hands dirty.
And I think that's a very valid point. I mean, I am not an advocate of bringing this under AFSL. Actually, quite the opposite. We, by law, give credit assistance. We do not give advice. So to start putting us into an advice-based model changes the whole dynamics of legislation and the principle of which we actually operate under. Now, with educational standards, you've got to have an entry point into an industry, and Cert 4 is our entry point. If we move away from that, where do we start from? The diploma that we have in our industry, I'll be honest with you, I think it's not worth what it's written as. It has some value to it. It probably has a better rubber stamp on it, but as far as an educational qualification, I tell you now, I've been over 40 years in this game, never done a diploma, and I reckon I can talk this industry better than most. It's experience, it's training that is the key.
It's an on the job.
Yeah. Anyone can get a bit of paper. I'm not trying to degrade the diploma, but I don't think it's the be all and end all, in my view.
And my father is a retired accountant now. When I was talking to him quite a few years ago about our CPD hours, I actually had to accrue more hours than he had to as a CPA.
Wow.
Which I was quite surprised at. And his is one day, once a year, $500, do your course and you're done, and that meets your educational standards. And tax law doesn't, I don't know enough about tax, but it doesn't change, I dare say, as frequently as 30 different lender policy that we've got to keep on top of.
Yeah.
Okay, guys, now I'm just going to change it a little bit now. I'm going to basically ask questions from the audience. The questions have been coming up as we're talking. The feed you can't see, but I do. So I'm going to start asking you those questions and seeing if we can actually...
Before you do, can I just make one point? Are we still running out?
Yeah, yes,
yeah.
It is still
just
up.
in regards to a lot of suggestions I've seen in regards to bank banning, in regards to do not support this lender. Can I get the emotion behind it. Can I please suggest this does not do us any favours? Find the right product for your client, providing they deal with brokers. Obviously, if it's UBank, well, they don't deal with us, it's end of the story.
Yeah, I totally agree with that, because at the end of the day, you're just basically helping them paint the picture that they want to paint of you.
Yeah, so it doesn't, I don't think it adds to the perception of what's already out there negatively towards us, and I don't think it helps our cause in any way.
And we have to act in the best interest of the client.
Yeah.
Cool.
So I'll go all the way back. There's a couple of questions there. Lots of people saying they can't hear us. Now they're saying that they can, so which is all good.
We'll start again.
No. So, okay, so there's a good one from George Zakia. So I do apologise if I said the wrong word, pronounced your name incorrectly. Is the FBAA and MBAA undertaking a detailed study review of overseas markets? There's only snippets here and there, but not a comprehensive understanding.
Yeah. Those of you who follow my conversation over the last year, we established in conjunction with other countries the first international federation for mortgage broking to have those conversations, industry-style conversations, specifically to understand different markets across the country. I've spoken 3 times in Canada in particular, as well as the conversations throughout the UK and the USA, and including the Netherlands. So we, there's not been a collaborative effort, but the conversation we're having with the politicians at the moment is actually, we do have a preeminent voice on what happens on different marketplaces because of that federation, and also our interaction with the Netherlands, to the point that most people actually don't understand the Netherlands model. And I've given 2 explanations of it already today. And it is not comparing apples with apples, not even close. So that is a discussion that is bringing politicians to the table as well.
Scott and I are available for the study tour. Peter, if you...
Can you pay for my ticket?
Yeah. I think it's also, you compare in a different country. I remember when the GFC people were comparing what happened in America here. Yeah. You had that, you could walk away without any...
Exactly. The most important thing to understand, and this is why we set the federation up, is to understand the journey. Because the journey is all important. So like the journey as to why the UK system is today is completely different to ours. The whole Netherlands thing is a fallback to what happened in World War II, when the Dutch were trying to re-stimulate people to get back into housing. They created an investment bond, which was an advice piece, buckled a mortgage to it, it was tax deductible, you paid fees. But what happened in the GFC, it all crapped itself. And then they said, well, that's no good. And so in 2013, they changed the laws and said, well, if you're going to have this advice piece, that you need to pay for it. But you know what? The whole of Europe said commissions are fine. So the European countries said, no, it's good. Netherlands just stood to one side. It's not a comparable example to anything like our experiences here. There's a lot more to it than that, but you know, just as a quick heads up. So it is very important to understand what happens in different countries. Because our regulators talk to them. Sorry.
And there's a cultural difference too. If you look at the UK market, the insurances are sold with the majority of deals, that, whereas in this country it's just not the case.
No, but that's a fallback of history as to how they structured their lending decades ago as to why it happens today. And that's why they have such a high penetration of insurance premium into it. It's the journey, it's different, it's not the same. And that's what gets scary. It happened to us with the changes in credit card legislation as well. That was an outflow from the UK, so we must have these conversations, and we do that through the Federation.
Okay, so Pete, this is a question for you, another one. The MF from Nick Benkawi. Again, sorry, Nick, if I pronounced your name incorrectly. I am Asian after all. The MFAA have a petition. This is a problem. Why did the FBAA not join forces with the FBAA, OGATors and lenders?
Firstly, we weren't aware initially that MFAA were doing a petition, and we backed the one that was first in the marketplace, which was through change.org. It's also independent. This is not about brand. This is about the industry, and that's an independent voice. It's still the largest in the marketplace, and we didn't want to fragment it. So if we started a separate conversation, we'd be guilty of fragmenting it. And there's some other things that happened behind the scenes that made it unviable for the FBAA to directly join in with what MFAA are doing. It's probably not appropriate for me to comment on that. Trust me on it.
Thank you. Damien McIntyre asked, should we be asking big builders to get behind brokers as well?
Yes.
Yeah.
Yes.
I know a nice broker like big builder behind me. It was great.
I guess, I suppose, okay, so I might widen it to the question out. So, who should brokers approach to support brokers? I mean, I could see some real estate agents doing it. I can see some, what do you call it, the buyers advocates doing it.
I think you want to restrict that to anyone over 18, anyone who's north of Hobart and south of Cape York. As long as they're in that geographic, then you should be asking them for your support.
Anyone and everyone. All your customer bases, everyone you interact with, whether they be the estate agent, accountants, solicitors, conveyancers, borrowers, etc., you want to rally their support.
But look at your influencers as well. So if you've got a real estate agent in your area who's a strong influencer, who's got a strong database, ask them, would you mind doing a support? We make their job easier. You speak to conveyancers, someone mentioned at a conveyancer on Finance and Coffee that they were quite disheartened that potentially brokers could leave because their job is significantly easier with the broker as the contact as opposed to an offshore call centre.
Okay, so this one is, actually I'm going to pick on you, Brent. I'll just move my head out of the way because you might see my ugly head. It's actually going forward. Andrew Lim asked, what are your thoughts about newer entrants coming into the industry and people exiting? You've seen a fair few people seeking new employment or being affected by the ERC pretty much immediately.
Yeah, so it's a difficult conversation at the moment because of that doubt. So you look at a new entrant coming in and they've prior to the report coming out, there was a very clear conversation about this is what you're looking to do. You build your business, you've got two valuable assets, you've got your database and you've got your trail, and you build your business based around that. Well, that's conversation's changed now, but we don't know what the definitive answer is. So the new entrant piece is a challenge. I think what we will see though is the industry will increase again in professionalism. I think we'll see more broker businesses with employees and staff and the office thing. I'm not saying that the home broker days are numbered by far. Absolutely not. They will still exist, but I think there'll be a real shift to going, well, if I look at the end-to-end value chain of what I deliver a customer from that initial prospecting and sourcing a customer through to post-settlement care, as the practitioner, as the broker, I may now only choose to do this part of it. And I may start by outsourcing some loan processing or outsourcing my marketing. And then I might bring some staff in, and build from there. And of course, as you bring staff in, you need somewhere for them to sit, and your home may not be the right place. So I think we'll start to see that growth of that.
But these things, I guess I reflect over 40 odd years of being in this game, is that there's been numerous hurdles that have come to us, whether it be GFCs, NCCP, lenders telling brokers we're not going to deal with you. We've weathered all these storms.
We have. Yeah.
But the reality was our market was driven through the mid-90s by consumer sentiment wanting our services. That hasn't changed.
No.
And we are not doing anything systemically wrong. We will survive this. We've just got to stay focused and collectively together.
Yeah, spot on. So the new entrant piece, we may see more salaried roles come into the market where people are employed into jobs rather than starting on a commission-only basis.
I'll just add something in there. We interviewed a lady she'd worked in mortgage managers before in credit.
Yeah.
Approached us through one of our existing brokers to come on board. We said, look, we like you, here's the paperwork, just wait till after last Monday, to see what the outcome is. On Tuesday, my advice with her, if you want to come on board, you're absolutely welcome, but it may be pertinent to consider other options.
Yeah.
She actually come back today and said, look, I don't know what I'm missing, so for me it's not, I won't know that anyway, so I'm happy to come on board.
That's exactly right. And a new broker coming in only knows the model they come into. They don't know what used to be.
Yes.
The other piece to that is I think we'll see more diversification. I think that will continue, and I know we've talked in the industry about diversification for a number of years now, asset finance, insurances, but also then look at diversifying into potentially having practitioners in different industries working together, such as have a broker at a financial firm or a broker and an accountant working together.
Which are our businesses doing that?
Yeah, our model is extremely diverse.
Yeah.
We do everything from even electricity comparison as part of
Yeah. So
it's not you're not going to retire on that, but people are doing that service anyway. But if you don't offer it, they're going to go to iSelect or compare the market.
And every broker's got access to those sort of products. You've got the Moving Hub and those sort of businesses, etc.
Yeah.
Sweet. Excellent, thanks. So thank you. Now, I'm a member of the studio audience. Has a question that was passed to me. Effectively, without a doubt, brokers have been thrown under a bus. Now, there's also talk about the introducer channel as well. Now, I don't think Hayne or anyone else there actually understood that introducers and brokers were not the same. It just felt like
the media, I believe, didn't, and they said, like they referred to the gym owner case where he was referring a significant number of deals to NAB, but the report does specifically mention introducers, and it says it's quite okay, which is quite astonishing. So it would almost be more viable to be an introducer and just say, hey, here you go, here's name and number, give them a call for 0.5. Which is what my local NAB used to pay the real estate agent next to me, and they asked me if I'd match that. I said, look, to be honest, I'm tempted to take that offer because
because banks are offering as 0.35 to 0.55 to referrers to send clients to them. No compliance is needed. You don't need any PIs. You don't need anything.
I think ASIC has a different view. Potentially, our regulators might not necessarily support that. Without further investigation.
There's significant risk in that model.
Yeah.
So, but do you think
for the lenders?
The lenders, do you think the lenders will continue that?
Yes.
Because I think you put in the post the other day, right? Someone approached you or something like that for 0.35 just to refer. So they're still doing it.
That wasn't me. Sorry.
No.
No, I do recall that post. Someone about they were at lunch with someone and they got a call from it was a planner and they had lunch. They got a call offering 0.35 for name and number while they're at lunch.
I think though the regulatory scrutiny with the lenders around that sphere is something that has started and will be more so challenged. We look at it and say, I don't think it's a viable model, to be honest with you. It's from a lender's perspective. I think it has challenges with it, specifically around the regulatory framework. So that all care and no responsibility, I don't think plays out particularly well.
Okay.
That's only my view.
It must be difficult when you've got a bank staff member on a salary, seeing a referrer making a bucket of money. It seems to not quite be a level playing field. I wonder if there's a risk of some sort of...
It doesn't. for me as a broker, it doesn't really bother me. It's it annoys
Yeah, no,
me, but it's a
Just
different
coming
value.
from that risk perspective.
It's a different
again.
value proposition, I guess, and in that regards, from you're only dealing with NAB, and especially in the current market where product and policy is such a driver on where the outcome is.
Okay, so we've got 5 minutes left. Sorry, I need to be mindful of time because otherwise you'll be.
That's in Queensland time or New South Wales, because if not, I've got another hour.
You get okay. So
1 hour and 10 years. Yeah.
all right. So to the audience, basically this whole interview will be transcribed and reposted, so you'll hear all the words basically. The mic today, I do apologise. Brian Taylor has a very good question. Hi guys, I'm late to Q&A and apologise, it hasn't been covered already. Who are the key people in the industry bodies are in discussion with? If we look at the CIF and all the effort that went into this, it all seems to have fallen on deaf ears. So who are the people we as an industry are we speaking with face to face and have actually committed to taking this further and actually have the power to do something for us? Can we get these people's names so we can make our voices heard? That's a difficult one, I think.
Can I just start with, I don't think the CIF's work was in any way a waste of time. I think it was fantastic, and what it's done is create the foundation for where we're now heading. If that work hadn't been done by the CIF at the time, it would have to be done now. So it's fantastic that we're starting off with that platform. Perhaps, we did discuss earlier, Peter, you talked about how the CIF haven't got a view as to where they're heading at the moment, but we do need those people, those spokespeople.
I think the CIF does have a vision where it's going forward, but you've got to understand the Commodities Reform was designed to talk back to a regulatory piece, not to deal with government or political matters. That was not what was on the platter. So they're dealing with Treasury and ASIC, they've got great rapport there. So the Commodities Forum has a part to play in regards to that collective voice dealing on regulatory matters. Politics is different, and in all honesty, I think I could rattle off probably close to a dozen names of people I'm dealing with at the moment. It's at this stage, and where we're at the moment, it is better that stays as a focused conversation, because there's certain things that are being said that's sensitive. Understand that politicians do know the value proposition of mortgage broking. To say that they don't is actually wrong. They're dealing with a whole lot of things out the back of the Royal Commission. It's challenging them, but as I said earlier, those conversations are also changing in their own context. So I think talk to your local politicians is very, very important. Do that, speak to them, especially the federal members and senators, get in touch with them, and the key players at the top of the food chain are very much being spoken to at significant detail and depth, and it's something I know that we're doing.
And certainly, Brian, I can guarantee you that your aggregator will be having conversations with all those lenders where the aggregator holds those agreements. Those conversations are taking place today. And the more that they take place, the greater those thoughts will start to form into something that works.
Okay, so with that, I'd probably say thank you to the panel for coming today. As our first one, I do apologise about the technical.
Can I just add one other thing I wanted to say very quickly? One is the thing that I've seen a lot of people posting about brokers and they're getting a pay cut, and that's very important to us. For the consumer, they don't really care. This is going back to the Uber and taxi agreement argument. Now, the difference with Uber and taxis was bringing additional competition to the market. With this, it's reducing competition to the market. But people don't care whether we get paid $1 or $100, as long as it doesn't, in my opinion anyway, that it doesn't cost them money. We've got to be focusing on what the benefit to the client is, and that's increased competition, which will in turn lead to better outcomes. People will no doubt say, well, I hunted down a 3.4% home loan through whoever. That's great, but almost certainly that indirectly benefited from the competition that we have provided. And I think to focus on the commission cut and that kind of thing is, in my opinion, the wrong focus. It's got to be the consumer focus.
Completely agree, Scott. Yeah.
Well, guys, thank you so much. Look out for the video again. We're going to have it transcribed, like I said, so that this audio today was pretty appalling. So I do apologise. Peter, thank you so much for taking time to come out and speak today. Brett, thank you as well for taking your time as well on your scooter on this wet day in Melbourne. So, and Nate, thank you. The awesome dad joke coming down from Queensland. I hope you don't actually, are late for your plane because Joe will kill me.
She probably will appreciate it.
So, guys, thank you. And we'll run a couple more, obviously, because we're at this critical stage. I think people really want to know what's going on. So we'll be running a few more of these Q&As in the following weeks as well. Thank you very much.
Thank you.